John Teixeira with Teixeira Realty Group, RE/MAX Associates, and Trever Kerr with Gateway Mortgage here for our Mortgage Minute number 3. That's it. I like it. So we're 3 down and God knows how many more to go. So today's topic is going to be about VA loans.
VA loans are very important, and it's a great loan product for all the veterans out there. Number one, that loan product is 100% financing. A lot of people know that. The best thing about VA loans is they don't charge you any mortgage insurance on a monthly basis, which makes that loan so much cheaper than a lot of other options out there in this market.
So that's awesome, Trevor. I've got 2 questions. When you say it's a 100% loan, what does that mean?
It's a 100% loan as far as no down payment on the loan.
I don't have to pay any down payment if I'm a veteran?
No down payment.
Sweet. Where's the Army? I'm gonna get. Do I sign up for the Army, Navy? What I got to sign up with?
Go enlist. We need you.
All right. I'm gonna go. No down payment. Let's go.
Unfortunately, at your age, I don't think they'll let you enroll anymore.
No.
Yeah. You stick to the real estate. We'll let them do that, and we'll help them out when they come out.
Are you kidding me? They wouldn't take me. All right. Well, the Marines are probably better off without me anyways, but hey, I got another question for you.
Sure.
You mentioned mortgage interest. What is that?
Mortgage insurance. Mortgage insurance, anytime you don't put down 20%, you have some sort of mortgage insurance on a loan, whether it's a conventional loan, an FHA loan, a USDA loan, and they all charge a monthly mortgage insurance premium. The great thing about VA is they do not charge you a monthly premium that saves you hundreds, $100 to hundreds of dollars depending on your loan amount.
So in essence, what that is insurance for the lender that the borrower pays for.
That is correct.
All right, got it. All right, so Trevor, as I run across and work with a lot of veterans, most of them make the assumption that when they use their VA loan, that they can only use it one time in their lifetime. Can you talk about that a little bit?
There are definitely exceptions to that rule. Okay. VA is only there to finance your primary residence. Now, however, a lot of military personnel gets moved across the country a lot, and so they buy their one home and then they're moved across the country and they decide they're going to hang on to that home as a rental. At that point in time, there are instances where you can use your VA twice, okay, on your bonus entitlement, as long as you're spending over $144,001. I know that's a crazy number, but that's the way VA set it up. If you're spending more than that, they'll let you use it twice. There is a cap limit, which usually on your second home usually caps you out at about $297,000.
So Trevor, I've recently learned something from you that I didn't know, and that veterans that have a disability actually do not have to pay a funding fee, which saves them a lot of money in closing costs.
It does. Normally, if you are disabled through the military, okay, you do not have to pay what they call as an upfront funding fee or a VA funding fee that they roll into your loan, which makes a big difference. It's taking away a little bit of the equity on the home when they're having to do that. And a first-time use of the VA, they're charging you a 2.15% that they're rolling into your loan. So if you are disabled through the military, they're waiving that fee and basically giving you this 100% loan with no funding fee, no mortgage insurance whatsoever.
Wow, that's awesome. You know what? I have literally put veterans into homes. You and I have done this so much over the years, over the past 12, 13 years, where they have come to the table sometimes with no money whatsoever. I've seen them come to the table and actually get money back. I mean, a small amount of money. We're not talking about huge, but I mean, it just works out sometimes that they're getting $200-300 back, $500 at the closing table while they're buying a house. So it's really
that's amazing.
Yeah, it's a great thing. Then those instances are instances where we're able to get the seller to pay for the closing costs for the veteran. So it's a great program. So one more thing, we want to talk about the Texas Vet Program is kind of an extension of the VA program. I know you were just telling me you guys took that over. Tell us a little bit about Texas Vet.
Yeah, the Texas Vet Program is amazing, and we're happy to be the master servicer for the Texas Vet Program now. This is a great program for veterans to utilize that offer a way discounted rate, which can make hundreds of dollars difference in your monthly payment by utilizing this program. They do charge a participation fee and stuff, but normally your recoup time is about 2 to 3 years, so when you look at the long term, you're saving thousands and thousands of dollars by participating in this program.
So I recently got an example of the difference between VA and Texas Vet. I want to kind of go through with you. Tell me if this is right. So this participation fee that you're talking about is like $3,000, right? Is that correct?
It depends on the sales price of the home, but on a $200,000 sales price, it ends up being about $3,000 more.
Okay. So my understanding is with this Texas Vet that your FICO score or your credit qualifying doesn't affect the interest rate like it does with a normal VA loan. Is that correct?
That is correct. As long as we can get you qualified for the loan, whether you're a 600 credit score or a 700 credit score, you're getting the same low rate. For instance, right now, if you're a disabled veteran, right now that interest rate's all the way down to 3.03%.
Wow, that's amazing. You guys, nobody gets 3%. That's just amazing. So compare that to a normal VA rate for a good qualified.
A good qualified borrower is paying 4%, with good credit, at this point in time. And, using this participation through the Texas VLB, you're getting that 3.03 whether you're a 600 credit score or 700.
I know you mentioned this a minute ago, but how long does it take to recoup that $3,000 participation fee?
Again, it depends on the sales price of the home and what rates are at that point in time, but normally what I'm looking at is anywhere from a 2 to 2.5 year period of time for you to recoup that money. So if you're going to be in this house 5+ years, you're going to double your money in the long run.
Okay, so it makes a lot of sense to pay that money up front, especially if you're going to be in the house long term. You're going to save a lot of money over the course of 10, 20, or 30 years if you're going to be in that home a while. So, good. Great information about VA loans. If you have any more questions about VA loans, you can go to Trevor's website, you can go to my website, you can give Trevor a call. He is great to talk to over the phone. He's easy to talk to, and he'll be happy to answer your questions. You know what, Trevor, one of the other things, people always think that getting their VA certification is a really tough task. And I always tell them that just call Trevor. He gets it done. He goes on a website, gets it done, downloads it in no time.
It's a simple deal. Give me a call. I'll get that at no cost to you. It takes me a couple days to do, which if you try to do it on your own, it'll take you a couple weeks. So I'll be happy to do it for you.
Call me and Trevor if you're ready to use your VA loan. We're happy to help.